Welcome to Money Talks with Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, the S&P 500 extends its slide. Trump's transition talk fuels recession fears. Asian stocks extend declines, tracking U.S. losses. Can Philippine shares sustain their rally? And boosting your chances of getting that finance job with the CQL or GCC certification. We hear from Fitch Learning from London. U.S. markets fall on Monday in its deepest decline of the year so far, as investors grow worried that the U.S. is tipping toward a recession. The Dow Jones slid by about 2%, and the S&P 500 down by almost 3%, and the Nasdaq drops by about 4%. Let's take a closer look at the S&P 500. The index already erased its gains since Trump won re-election in November 2024. That's about that time. See that decline there? It signals that it's nearing a correction after it declined by roughly 9% from its record high last month. Let's take a look at the Nasdaq. It's also had its hardest hit out of the three indexes. See that extreme drop we're seeing right here? Last week, the index already fell into a correction, and Monday's session is the worst since October 2022. Now, one of the stocks that dropped the steepest is Tesla, in which its 15% decline is the biggest since 2020. The Magnificent Seven stocks, which include Apple, Microsoft, Alphabet, Amazon, Nvidia, and Meta, fell between 2 and 5%. Let's take a look at U.S. futures and see how they're pointing toward a decline. As you can see here, when the markets open tomorrow, local time in New York, all are in the red. The Dow falling by about 1/3%, S&P 500 by about 1/6%, and the Nasdaq by 1%. One analyst told Reuters the economic uncertainties brought about by recession fears and tariffs are forcing the markets to sell off.
Markets continue to sell off in the wake of additional and continued uncertainty around what the Trump tariff situation is going to look like. I think the speed with which the market is reassessing probabilities around recession is directly linked with the two things. One, uncertainty around tariffs and what the impact may have on inflation and just the general economic outlook. And then two, there's a bit of a growth scare that's going on at the same time. And so those two things, compounded by consumer sentiment, which is just really bad right now, those things are adding up to this, moment of volatility in the market.
To mitigate the effects of a possible trade war between the U.S. and China, mainland Chinese investors are taking positions in Hong Kong's stock market. According to Bloomberg, investors already purchased a record 29.6 billion Hong Kong dollars, or 3.8 billion U.S. dollars, on a net basis in March, surpassing the previous high set in early 2021. Mainland investors now hold nearly 12% of Hong Kong equities, up from just 5% at the tail end of 2020. That buying spree comes amid a surge in the Chinese AI market, buoyed by the arrival of DeepSeek. DeepSeek has rattled chip makers in the U.S., particularly Nvidia, and the U.S. government is considering measures to ban the Chinese AI firm from government devices. Now, Trump's comments have reverberated through Asian markets, all of them down in the first hour of trading. As you can see, the Australian stock market there falling by 1.25%, South Korea's Kospi index declining by 1.7%, and Japan's Nikkei 225 losing by over 2% at the open. Going back to Hong Kong, despite Chinese investors flocking to its stock market, mainland stocks declined by 2%. Besides global trade tensions, investors are also worried by China's deflationary cycle. But you've seen that run up there, that interest in the Chinese stocks listed in the Hong Kong markets. Hong Kong markets are trading now, and the opening numbers are just about to come in. Investors are taking continued interest in DeepSeek through the China Enterprises Index. Let's take a look at our own markets here in the Philippines to see if the PSEI is holding up. It is down by about 0.7% at the get-go. First 5 minutes of trading, still above 6,300. The market was up yesterday by about 1%, reaching the 6,300 mark, as you can see right here. If it ends up, it'll be the 7th day in a row. If it ends down, that's the first in 6 sessions. Let's take a look at the dollar peso exchange and see how the peso is doing. It's a tad weaker by about 57.45 to the dollar, coming from the previous close of 57.41 against the greenback. Where's all the money going? Let's check in on Kaloy Capasillo, the trader at AP Securities. So good to have you on, Kaloy. Thank you so much for joining us.
Thank you, Cathy, for having me.
So big question, where's the money going? I thought I might have seen a higher open there, but it's lower.
Yeah, today, I guess the market has been up for a few days, probably 7 days. We haven't seen that much in a long time.
Not much with the net inflows of about 1.7 billion. I mean, that's quite
No,
encouraging,
I mean, we
isn't it?
haven't seen that kind of market movement for the last 6 months to a year. So it's like everyone is so apprehensive to buy up and follow the trend right now. So I believe a correction is pretty much welcome for a lot of investors.
Well, where's that sentiment coming from? I mean, I've just shown the charts. Everything's like falling in the developed markets, in the U.S. in particular. Typically, when U.S. markets fall, so does the Philippines.
Yes. Okay, but so we were looking at it last year. So last year, the U.S. Nasdaq and S&P did more around 22 or 28% growth, while the CN5 markets, like Philippines, for example, did 1%, Thailand was -1%, Indonesia was -3%. So it's like when they're going up, we're not with them, but when they're going down, we are with them. So
We should be going down. Look at all those red marks there, the red arrows on the stock market. So it's just a matter of time then. Don't get our hopes up. Is that the message?
So every Monday we have our Monday huddle with a research team and the sales guys, and I was saying, hey guys, so look, we are still catching up on last year's close of around 6.5, so and that was at 10.6 times PE, and I said, so what's the market PE of the US? It's 21 to 22. Okay, so have we seen something like catching up on the CN5 moving up the ladder and the US markets catching down on us? So that's what we're hoping on, right? So we are
The dog following the tail, tail following the dog. But we got the Bangko Central, which actually gives us that breathing space that, hey, we've got the central bank to look on for some hope that the policy rate cut will come by April because of slower inflation.
Yeah, inflation is easing. And of course, the peso is getting more stable. It's where they want it to be. So yes, we believe so that the rate cut is forthcoming by April.
By how much? On April 3rd?
That, as we always wait it, but it's always welcome because
25, 50? I mean, is the market discounting already a 50 basis point cut?
Not yet. I believe not yet. Maybe just 25 because at 50, everyone will be asking a lot of questions again. So, but as a lot of people would know in the business, the stock market is inversely correlated to those rates. So, if more money is in the market, then we might see more action in the stock market, going from fixed income to the stock market with higher potential.
Well, you know a little bit more about inflation because you're the pizza man. You do have a side hustle, and it's a pizza business. I'm wondering whether people really feel that inflation is falling, because I get a lot of complaints. I mean, Cathy, I know inflation is slowing, but I'm still paying a lot more for my food.
That's partly true. Yes, I run Brooklyn's New York Pizza, and well, on our side, so wheat prices went down, so we're happy because a big part of our expenses is the dough. However, cheese prices, mozzarella cheese went up, which comprise more of my cost. So it still balances everything out. I think the bigger concern now would be coffee prices, right? Like, because that's what people actually go to every day, right? So they would feel it more in the coffee and say, hey, how come coffee prices are still going up and they're saying food prices are coming down? So for us, we're just happy that it offsets some of the things, but we wouldn't say it's really coming down yet. Okay, we're hopeful that that the cost of goods go lower so we can offer better value to our customers.
So I guess no price cuts for now for your pizza. Corporate earnings, I think that's also shown some robust results, which is also pulling the market up.
Yes. So yesterday I was also pulling up, I told them, can you bring me a 5-year chart, or just right after the pandemic? I said, okay, so look, you have a 10.6 PE recently was a 5-year average. It's around 14.5 PE. Okay, given that we were not looking at going back to those averages. However, can you give me the market yield? The market yield right now is 3%. The average yield for the PSA. Its 10-year average is 2%. All right, so I guess that's really showing that corporate earnings they're performing. They're declaring more dividends. Now I have something to show, like a 3% dividend yield against a 5% fixed income, but I have a good chance for upside. So that makes me a better bet now than a lot of my competing fixed income products.
Right, and it makes it an even better bet if the foreign investors are also buying the markets.
Yes.
I'm looking at the turnover, and the net value turnover had breached 6 billion, but it's now fallen below that. Are you also tracking that as a sign of sentiment as to where the market is going? Because it's really foreign investor money that drives our markets.
Yes. Well, on a daily basis, we're just seeing somewhere between 4 to 5 billion, unless we're coming close to rebalancing. Like we've seen that end of January where you had the index rebal, and then end of February you have the MSCI rebalancing. This month, I believe we're having the FTSE rebal. It's not as big as the MSCI, but so during those days, then we see a lot of activity. That's where all the action happens. But on typical days and weeks like this, I think we're gonna just see a sideways market with timid volume around 4 to 5 billion.
Right, so the message is stocks over bonds?
Stocks.
All right, I hold you to that. Thank you, Kaloy.
Thank you so
really
much,
appreciate
Cathy.
it. Kaloy Capasilio of AP Securities joining us live. And you're watching Money Talks. Coming up after the break, Fitch Learning talks about the demand for qualifications among finance professionals in Southeast Asia. And doctors declare Pope Francis out of imminent danger because of pneumonia. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Foreign direct investments in the Philippines inched up by 0.1% in 2024, but fell in December to an 11-year low. Preliminary data from the Bangko Sentral ng Pilipinas show FDI net inflows for 2024 rose to $8.93 billion, the highest in 2 years, but below the $9 billion forecast. Meanwhile, December net inflows fell to $110 million, an 85% drop from 2023 and the lowest since 2013. The decline was due to higher redebt payments by local firms to foreign investors. Rizal Commercial Banking Corporation Chief Economist Mike Ricafort also cites policy uncertainties under U.S. President Trump as a factor. The Bangko Sentral expects $10 billion in net inflows for 2025. Thrift banks will ask the Bangko Sentral to lower minimum liquidity ratio to 16% as the reserve requirement ratio cut takes effect later this month. Chamber of Thrift Banks President Mary Jane Pereira says they will request the adjustment now that the RRR is set to drop to zero. The Bangko Sentral previously rejected the proposal, saying the current 20% ratio ensures banks have enough liquid assets. During the pandemic, Bangko Sentral lowered it to 16% but brought it back to 20% in 2022. The triple R cut takes effect on March 28th. PLDT Enterprise has renewed its partnership with Coca-Cola Euro-Pacific Aboitiz Philippines. PLDT remains the beverage company's digital and connectivity provider. Under the deal, PLDT will provide fixed, wireless, and information and communications technology services to boost Coca-Cola's operations. Coca-Cola runs 18 manufacturing plants nationwide, relying on robust digital infrastructure. PLDT Enterprise says its services help streamline communication and improve distribution networks. For more details, check out Business World online. Around the globe, in Syria, the Kurdish-led and U.S.-backed militia controlling the oil-rich northeastern part of the country merges with the interim government. The Syrian Democratic Forces, or SDF, will integrate all civil and military institutions into the new Syrian state by the end of the year. The deal is a moment of reprieve for Syria's interim president, Ahmed al-Shara. Al-Shara ascended to power after insurgents toppled Syria's longtime dictator, Bashar al-Assad. This week, violence broke out in coastal Syria after armed men loyal to al-Assad ambushed government security forces in the province of Latakia. In the U.S., with X unavailable to thousands of users Monday, its owner Elon Musk claims the outages could be the result of a massive cyber attack. Over 40,000 users reported no access to the platform, with more than 50% of them saying the X app was inaccessible. An expert told the AP that it's impossible to verify Musk's claims without seeing technical data from X. Given the short duration of the outages, a cyber attack was unlikely unless it's a warning for something larger to come. And in the Vatican, after spending nearly a month in hospital, Pope Francis is no longer in danger of death, a sign of progress for the 88-year-old pontiff battling double pneumonia. According to his latest health bulletin, doctors have decided to earlier lift a guarded prognosis. They still expect the pontiff to continue medical treatment in a hospital setting for a few more days. The Vatican has not given an exact time frame for his discharge. The Pope has been admitted to Rome's Gemelli Hospital since February 14. Fitch Learning, part of the Fitch Group, is seeing a rise in demand for qualifications among finance professionals in Southeast Asia as artificial intelligence transforms work. I spoke earlier with Fitch Learning CEO Andreas Carrascos, and this is what he had to say.
We're here to sort of talk about how individuals who want to have careers in finance can upskill themselves efficiently, successfully, and really sort of kick through their careers to achieve their goals and their organization's goals. I think your audience is probably aware of the library of professional qualifications that exist, but we're going to talk about two specific ones. So the first one is the Certificate in Quantitative Finance, which is offered by the CQF Institute. Now, this qualification has been around for over 20 years and has really gone from strength to strength. What was really relevant about the CQF at the genesis of its sort of creation was it was practitioner based. So the CQF is a qualification, from the industry for the industry. And way back when it was founded, it was really there to sort of help people move into quant finance and gain a qualification whilst they worked. Now, Cathy, you mentioned quite rightly, the advent of these new skills that are emerging. Emerging technologies drive emerging skills. So the CQF has sort of morphed into what's relevant for the future quant finance professional. But also now, let me sort of take you onto the Global Credit Certificate. So this is offered by a professional body called the Global Institute of Credit Professionals. That was founded by the Fitch Group a few years ago, and it also drawed on a lot of the experience from the CQF Institute in that it is from the industry for the industry. And what the GICP is focused on is three things. One, it wants to create the ecosystem to be thought leaders in credit, specifically for people who are looking to sort of grow their credit careers. Secondly, it offers career services. So very proud that we published the first careers guide, the first career salary guide for people who work in and around the credit capital markets. And then the third thing is education. And with education, the global qualification that the GICP offers is the Global Credit Certificate.
Could you cite a few changes as AI tools, including Gen AI, are deployed to help the likes of, say, relationship managers access content and how they're explaining all of that to clients right now?
Yes, so very much the content of both of these qualifications, but let's sort of stay with the Global Credit Certificate. That's really teaching how to understand credit risk with situations like, how to use big data. How do you use data to understand the credit risk profile of an organization, whether it be in sort of, pharmaceuticals, it could be a financial institution. And then also to understand the risk of AI on that organization. So you can no longer, just rely on the fundamental credit risk analysis skills that you had from yesteryear. We now have to look at how an organization might be disrupted by an emerging technology. And what does that do to the credit profile? Can you get your money back if you're lending it? And I think this generation coming into the market, as I said, we call it, there could be a potential skills crisis, because a lot of the people who are in the industry will not have had necessarily the experience of what's happening with these emerging technologies. But the people coming into the industry are going to have to manage the risk. So the idea of the Global Credit Certificate is to equip them to, be forward-looking.
And that was Andreas Carrascois of Fitch Learning in London. Coming up here on Money Talks, art and subway stations? Well, you'll see that in this Italian city. Guess where it is? Stay tuned for that and more after the break. Back to Money Talks, I'm Cathy Yang. In honor of National Women's Month, we've invited women who lead from small to large enterprises. And today, we focus in on the female co-founder of Penny Pairs, a jewelry brand created in 2018, which this month is highlighting stories and achievements of Filipino designers and entrepreneurs. With us for more is Penny Pairs Jewelry's Camille Jimenez. So good to have you with us, Camille. Thank you so much for joining us.
Thank you for having me.
All right, so you've just opened your store in Alabang. So that's in so many days or months you've opened a physical store for the jewelry shop. What is the value of opening a physical store versus just being online? And maybe even going hybrid, but a little bit more online because during the pandemic, sales were really robust.
Yeah, so we've actually opened 6 stores in the last 2 years. So Alabang Town Center is our newest one. And it's one thing that we learned, that customers really like to see the pieces in person. They like to be able to hold them, try them on, and generally see how it looks on them. So
what was it like then during the pandemic? Because sales were robust and
Yeah.
you really forged a sort of a path from 2018. You were the first online business in jewelry, one of the first ones. how did they get to try the pears? Or they didn't? They just took a chance then?
Yeah, so I think we got really lucky because we were already online when the pandemic hit. But the thing is, like, one of our best-selling products is earrings. So a lot of our customers started having meetings on Zoom. They started having Zoom calls. So they wanted something to dress them up a little bit, and earrings were, the perfect thing to make them feel confident, even though they were just behind a screen.
Right, because you're often just seeing the
Yes.
half of you on a Zoom, so
Yes,
everybody just wanted to
exactly.
dress up right here. But what are the rents like? I was just asking Kaloy about inflation for food, but for rents for consumer discretionaries, has it gone up? Is it still affordable, or has it come down?
I think the thing about rent for us is that recently we've been doing a lot of pop-ups. So the long-term rent in the malls actually is better for us than doing, a few days, like a weekend, or like the rent on a day-to-day basis. So generally, I think it's still pretty good.
How would you put a metric on that it's better to have a store rather than a pop-up? Because pop-ups have really become the in thing in malls right now.
So for us, it's really like the marketing value. So when we have a store, we make all the effort to build it, to spend on construction, to spend on like photo shoots and just all the general things that you need when you open a store. And when we do a pop-up, like we only see that for a few days. Whereas when you have a physical store, it's something that's more long-term. And so that's why we decided to go into that.
Are people just buying earrings, or it's the full regale right now? What are you seeing in your stores?
We see a lot of people wearing earrings. A lot of people recently have been into necklaces. So we came up with some collections that are a little bit more meaningful, like a birth flower collection. So people really want to connect with their jewelry. So we also have letters, so people can feel like it's more personal to them.
And I see that you want it to be high quality yet affordable. So which brings us back to raw materials and
Yeah.
see how that's pulling in some cost into your margins as well. How do you manage then, and where do you get your materials to make sure that you keep your margins?
So for us, yeah, the price of gold and silver has gone up. It's actually more than doubled since we started the brand.
Yeah.
But the thing is, I think we noticed that our customers, they really understand why our prices have increased because they see the quality of the jewelry. And we see that the jewelry quality is really what makes them keep coming back. So because we're very transparent about what our products are made of, which I think not a lot of jewelry brands or fashion brands in general are transparent about that, they're able to see that, oh, this is actually really good quality pieces, and it's okay for them that, yeah.
And international brands have taken notice. You've partnered up with a couple of brands there.
Yeah.
What does it do for brand awareness?
So Barbie actually was one of our biggest partnerships. Mattel reached out to us, and honestly, like when we got that message, we weren't sure if it was real because it was so surreal for us as a small Filipino brand that they wanted to partner with someone like us. And we're like a mostly women team. Actually, I think like 90% of our team is women. We just have one man, and everybody was so excited because Barbie was something we all grew up playing with. So we were able to do something fun, a nostalgic collection that our customers also really liked.
So was that on purpose, just one man in the team?
Yes.
So tell us about that international partnership and also the move that you're making now with Sasa Jimenez. I was just wondering, are you related at all?
No, we're not. So actually, Sasa has been a customer since the pandemic, and she's someone that we look up to because she's a designer, and we love her pieces, and we wanted to feature for Women's Month people in our community that have an impact like Sasa. She's designed beautiful gowns for a lot of people in the Philippines, and she also wears penny pairs. So we wanted to be very authentic about,
All right.
the people we feature.
10 seconds. What's it like to be girl boss? And for those that are watching, how can they be one?
I think it's just really, finding what you're passionate about and being really into something that you're doing. So for me, it's fashion and jewelry, and that's why I think I enjoy my job so much.
Right, and you look like it. Thank you so much, Camille. Really
Thank you
appreciate
so much.
it.
Thank you for having me.
Camille Jimenez of Penny Pairs. Now let's take a look at how Naples is bringing art closer to the masses. About 300 works of contemporary art are distributed in 20 subway stations across this city. At least 90 internationally renowned artists and architects are involved in the project that aims to make art part of daily life as seen in escalators, turnstiles, and crowded train carriages. During excavations, archaeologists unearthed ancient structures, including the remains of Neapolis's old port and medieval walls. These historical discoveries were integrated into the design. So inspirational. Maybe we could have it here in Metro Manila. Before we go, Rustan Commercial Corporation's Paolo Tantoco has passed away at the age of 44. Paolo's parents confirmed his passing in a statement posted by his brother Donnie on Facebook. Novena Masses will be held for Paolo until March 17. Paolo was Assistant Vice President for Administration at Rustan's, founded by his family decades ago. His contributions were vital in the company's operations. We offer our prayers for Paolo and his family. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. Have a great day ahead.